Hey, good afternoon, everyone. This is Trader Tim from over at eminimind.com. Going to take a look at the markets today. It is the 18th of September. I'm doing a market analysis video for Monday to kick off the week. As we head into this week, so it's a very, very big week in the markets. We've got the FOMC meeting kicking off tomorrow, and this is kind of that September meeting that kicks off the fall. So we should see really, really good trading from probably Thursday through about the second week of December, or at least a lot of good trading opportunities. So the meeting itself begins tomorrow, and the announcement comes out Wednesday afternoon. So be very cautious Wednesday morning. We could end up with a slower day tomorrow going into traders knowing that the FOMC forecasts and meeting announcement is going to come out on Wednesday. So that should be kind of very telling and really set up the rest of the year with this particular FOMC meeting announcement. Then we've got more numbers Thursday and Friday, jobless claims, PMI, housing price index. So a lot of things that are coming later this week that could really put a damper on the beginning of the week. Today we closed with a spinning top on the daily chart on the ES. Last week we really just solidified that 2500 level that we were kind of talking about up at this negative 23% target, forming a nice base right below that, and then breaking through it today, Monday. So now that we're at the negative 23% target of this daily, we pulled back to the 50, moved up to that 2500 level. I'm going to get rid of the 2475 since we've finally been able to close for now 1, 2, 3, 4, 5, 6 days in a row over that level. And what's next? Well, we've got the negative 61.8 and the negative 23 of this larger daily. That's about 25.20. So at this point, it's pretty tough to make any serious predictions because there's a lot of economic news coming out this week. Could we drift higher into that 25.20? Yes. I think on Wednesday we should see some sort of a move, meaning either we continue upwards in a nice big body candle, or we really start to sell off and make a little bit bigger correction or pullback. So pretty big day on Wednesday. If nothing happens, if we just sort of continue about where we're at this 2500 level and moving sideways, that could lead to just more indecision if there's kind of lack of action as a result of Wednesday's meeting. So I'm not so concerned with what is said at the meeting. I'm more concerned with how do traders react to what is said. One thing I wanted to look at here, if we go through the top line figures, you've got the S&P and the Dow both looking very strong. The Russell making a nice move off of lows, but still not above its previous swing high into those highs. But then the Nasdaq, we've got this triangle forming, sort of knocking its head, getting tighter and tighter towards the potential up here for a breakout. But then when we go to the individuals, we see Google breaking down, forming a triangle, but really not able to get any traction. Apple not breaking its swing low, but not really getting any lift as the market moves higher. So if we compare, this is what the S&P is doing, moving higher, and the Nasdaq, which the Apple is in the tech space. Nasdaq more of moving sideways, but then we have Apple and relatively weak compared to the broader market. If we go to Amazon, same thing, selling off in the last couple of days. And then Netflix is looking decent for a potential break up here. So as we have the potential to break in the NASDAQ, but then we go look at the individual stocks, we see it's kind of a mixed bag and almost more bearish than bullish by just some of the bigger names. So using caution up here in the typically the tech sector, the Nasdaq will lead us out of a recession, but it can also be the start of that bearish shift in a more bullish market. So Wednesday is going to be a big day. I'm not going to play around with it too much tomorrow afternoon and Wednesday morning, especially. We will be doing live trading tomorrow morning, watching the markets, talking about the things that are happening, trade entries, and all of that good stuff. I'm also doing a webinar about an hour after the trading session at noon Eastern Time, and you can get the link for that over at emoneymind.com. So use some caution in the next couple of days. We are up at the negative 23% target, but we do have room to run on the daily. So when we get into this open space, I like to go into the day expecting bigger moves, bigger body candles. If we break highs, expecting move after move, retracement after retracement to continue to break highs and have some follow through. Or if we're selling off, expecting follow through to the downside. So we're in a very good place in the markets. We have room to move to the upside, but we also have room to sell off to the downside. If we draw from lows to our current highs, the next smaller daily level kind of puts us at the previous highs from back here in July at that 24.75, that same number we've been talking about for a couple of months now. So even if we do get a pullback to 24.75, that negative 23% target also lines up with 25.20. So we've got a lot of confluence, a lot of opportunities for the market to pull back before moving higher, continue on moving higher, and in that process, there should be a lot of good intraday trading opportunities. So with that, I hope you have a great week. As always, you can shoot me an email if you have questions, tim@emoneymind.com. And don't forget to check out the webinar on Tuesday, where I'll be going into more detail on my individual trading strategies that I use for intraday trading. Check that out, emoneymind.com. Thanks, everyone.